With less than 3 days remaining until the monthly candle close, is Bitcoin going to be able to hold above 30,000, or will the short-term weakness get the better of it? These are questions we're going to be answering in today's video. Let's dive in. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the higher time frame and smaller time frame. As you know, Bitcoin is closing out that monthly candle in less than 72 hours and is currently sitting above 30,000. The smaller time frame, however, is showing early signs of weakness and indicating a possible rejection and pullback could be in play over the next few days. We're going to discuss the probabilities of closing above 30,000, what it would mean if we close underneath it, and what the smaller time frame suggests about the next move. Before we get into the video, smash the like button, hit the comment button, and subscribe to the channel. We do daily videos of Bitcoin focusing on the facts, the data, the technical and structural information, the economic news, and the news environment as a whole. No hype, no emotion, no BS, pure, honest, raw technical analysis. If that is the kind of content you're interested in, join us on Telegram as well for daily updates. We post charts, we post videos, we give you updates on the market, we talk about the news events and the economy, and we keep you in the loop with not only Bitcoin, not only the entire market as a whole, but everything you need to understand to navigate this complicated market yourself. If you're interested in joining our trading channel, where we post trading setups for exact entries, exact targets, exact stop losses, we give you charts and justification for these, and we have a trading group chat to help educate and teach you guys about trading mindset, and of course, everything you need to execute trades yourself. If you're interested in joining that, you can go to the pinned comment up over here in the free channel to find more information, to contact us, and find our entire trading track record since February 2021. In fact, we've done over 671 trades in the 29 months we've been running VIP with an average of 79.28% win rate, which is absolutely fantastic, guys. Put a lot of effort in here to give you guys the best possible signals we can. Let's go ahead, guys, and get into the video. Starting with the market data, as you can see, June is up 12.56%. Absolutely fantastic month for Bitcoin, coming close to the monthly close. Looking at our 24-hour volume, we're sitting at 79 billion, just around 0.5% up, and liquidations are down 14%, sitting at 75 million. Let's take a look at those liquidations. We can see a pretty even split between shorts and longs, nearly directly cut 50-50 down the middle. Again, this is quite representative of indecision in the market. It is representative of a chop zone. We generally do see longs or shorts taking the cake in terms of the greater amount of liquidations, and we do see it pretty much cut and dry through the middle. It is indicative of chop, it is indicative of consolidation, it is indicative of indecision. Looking at the volatility index, we can see for the 30-day volatility index, we're actually starting to see it come down a little bit as the price is rising. Again, this is not really too much of a concern as it does average it out over the 30 days, but it could be a sign of initial weakness on the charts. Looking at the 60-day volatility index, we're starting to see the volatility index move upwards very slightly in an overall trend, but is more or less plateauing over the last few days, again, as the price is moving upwards. It's not the most ideal thing we want to be seeing. We do want to see the volatility index kind of move upwards with the price action. Let's go ahead, guys, and get into the DXY. As we can see on the DXY, we are still very much under our major resistance, which is downtrending dotted trend line. A break above this level will result in the DXY moving upwards to 105 to 106. This will be very bearish for the markets, and of course, if we do break below these support levels into this range, that will be very bullish for the markets. Look at the economic data coming up. We do have a few key ones. We do have on the 29th, which is tomorrow, we have personal spending and personal income. This is very leading for inflation. If we move down a few days, we can see we have NFP sitting on the 7th of July. Again, unemployment rate and NFP. And we move down a couple more days to the 12th. We can see we have our inflation, our core inflation month-on-month and year-on-year data. So very important information coming out very soon within the next 2 weeks. We're going to get another understanding of how inflation is tracking, how the markets are looking, and thus a potential systematic risk change in the market based on inflation data, and therefore again the probabilities of certain rate hikes or even another pause will come out in more light. Let's go ahead, guys, and get into the stock market. So the S&P 500 is still very much in that same pattern. I don't expect this to be very fast moving, but I do expect this to be gradually moving downwards until we reach either our higher support levels, our lower support levels, or the area of confluence between our POC and our uptrending support line. The overall trajectory right now is in a downtrend. We do need to break above this high to start pushing upwards, and we need a weekly candle close above this uptrending resistance to invalidate this move and push the price to retest 45 to 46,000. Until then, expect the S&P 500 to potentially go down. If the economic news comes out worse, suggestive of inflation is rising again, we can expect the rate of change toward the downside to rapidly increase. That is when we expect the market to start moving faster. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay, guys, so there's 2 main things I want to discuss today for Bitcoin. That is the significance of 30,000 and what will happen if we close under 30,000 / how could the charts develop to a point of which we would actually close under 30,000. So let's take a look at this daily chart first. As we can see, we have a downtrending resistance on the 12-hour, suggesting an area of diagonal resistance. So we can see over the last 6 or so days, we have failed to close a candle above this level numerous times, in fact, rejecting with numerous long wicks above this area of resistance. And therefore, we can say with certainty that this level is not only an area of resistance, but also a bullish trigger, meaning when it does break / if it does break, it will result in a move upwards towards our next liquidity zone, sitting between 31,300 and 32,000. But until then, resistance is resistance until it is not. If we flip the chart, we can actually look at it from a different perspective and say, well, this area is a possible support, right? We have a possible double bottom formation developing, and therefore the probabilities right now in favor of a move will be in favor of a move upwards. And if we do lose this level, if we break underneath it again, we're more likely to go downwards. Again, flipping the chart can help with perceived bias. So looking at the charts right now, we do expect a rejection to be possible, as we've been saying for the last few days. A rejection is possible until we break back above that trigger on the smaller time frame, which is going to be this downward trending resistance. Where could a rejection possibly take us? So let's dive into the smaller time frame. If we zoom into the smaller time frame, we can see there are our numerous rejections on this level. We have rejection number 1, we have a wick above, failed to break anything above there. We have another 4-hour rejection and another 4-hour rejection. So we've got 4 rejections in the span of about 5 days. If we look at our VRPV here on the right-hand side of the chart, we can see some gaps in the VRPV, but specifically gaps between around 29,800 to 29,000, from about 28,700 to 28,400, and then finally around 27,500. So we do know we have some major areas of support. We're going to go ahead and draw these ones in. First major area of support is going to be sitting in this range right over here in that gap. That is going to be the 27.5 area. Our next range of support is going to be sitting right over here around 28.7 to 29,000. And our next area of support is going to be sitting at around 29.8 to 29.7. So we do have some major area of support. If we do lose these levels, we can expect continuations downwards to these next support levels, with our main area of support being 27.5 and potentially this wick over here at 28.4. So if we do want to see a move toward the downside, we do have to lose this current area of support sitting around 30,000 to 29.8. If we lose 29.8, the short-term direction is going to flip bearish, okay? Let's keep this in mind. Currently, the direction is upwards. We have an overall uptrend that is bumping into a large degree of resistance at this downward trending level. This resistance is pushing the price from a strong move upwards to a move sideways. As a result of this shift in direction and volatility, we see momentum fall. So momentum is falling as a natural consequence of volatility dropping and the direction moving from up to sideways. So this is expected. What this represents is two things. It can represent weaknesses being displayed, or it can represent bullish consolidation. Now for bullish consolidation, there is one thing we want to see. We want to see the momentum reset and continue upwards before we get the break of this downward trend resistance. We have not quite yet seen that for momentum. What we're actually seeing is momentum is continuing downwards. So right now, this is displaying weakness. If we want to see that weakness develop into a downtrend, we do need to break below this lower support level. A loss of this lower support level sitting around 30,000 to 29.8 will lose our local low here, lose these points of retest, and push the price up towards our next major support, or if we flip the chart, into our next resistance, which is sitting around 28.9 to 28.8. So watch out for a downside move over the next few days. This is very important, guys, because if we do make this move, we are very likely to not close a monthly candle above 30,000. And we're going to discuss later in today's video why 30,000 is significant, what will it mean if we close under 30,000, and again, what will it mean if we close above. So on a smaller time frame, guys, watching this structure, specifically watching this downward trending resistance, watching this horizontal support, right now, you should be leaning slightly more toward the downside. The risk return for a move down and a correction is there. It is more likely to move down on a smaller time frame. It is more likely to correct as per the data. It doesn't necessarily mean it's going to. But if we're looking at our invalidations, we have very strong invalidations right above this resistance, and we have a nice risk return toward the downside. Now, again, just because we come down, it doesn't mean Bitcoin's doomed. It doesn't mean the end of the world. It is going to be a healthy correction. So let's zoom out a little bit more, guys, and talk about what this correction would mean. Let's say, hypothetically, we do see this correction play out. The lowest we're looking for is going to be, again, between 28,000 on this level over here to a potential low of around 27.5k. So let's say we go down to around 27.5k as a possible low. Let's say we come down and retest this level. And this is worst case scenario. Bitcoin is still going to be in an overall uptrend as per this uptrending diagonal resistance support line on this higher time frame chart. So any correction that occurs above this trend line is technically a healthy correction. So I wouldn't be concerned about the higher time frame flipping bearish or the overall weekly trend flipping bearish from a diagonal perspective unless we lose this uptrending diagonal support as per this chart. Furthermore, if we look at this chart over here, we can see our higher time frame zones and trend biases. We can see that above this downtrending resistance, we are in a bullish weekly trend as, again, we are above our higher time frame horizontal range over here, which is where we entered the bullish trend, and then we regained our daily bullish trend above the breakout over here. So we are officially in a bullish trend. A loss of our 25.2 to 24.4k level is when we enter a bearish trend. So right now, the bulls have complete control on the macro chart until 25.2k is lost. That doesn't mean the smaller time frame can't reject. That doesn't mean we can't see a rejection all the way down over here before we move back up. What it says is if we look at the overall probability of a continuation upwards versus a move down to 20,000, the probability versus bulls and bears shift in favor of the bears when 24.4k is lost. Meaning when this level is lost, the probability of a further continuation downwards increases in comparison to a move back upwards. While we remain above this major area of support, the probability of a continuation upwards remains. And this is why 30,000 is a significant level, as this level over here is a major horizontal support and it has been validated and confirmed. This level over here, the $30,000 major horizontal support, is technically still a resistance as we have not closed a monthly candle above. So the current price action deviating above should be considered deviation until the monthly candle closes above 30,000, flipping this area of resistance into an area of support, and when we do so, we'll go ahead and change it to a support level, but currently it is a resistance level. If we then close above 30,000, the probability of a continuation upwards through 32,000 continue and increase. So you can notice how when we close these levels out, when we validate these areas of support, the probabilities start to shift in favor or against certain directional moves. So moving back to the smaller time frame. Excuse me, looking at the smaller time frame on even a smaller chart, moving down to an hour, we can see this area of significant support. And again, you can see as soon as this level is lost to 30,000 to 29.8, we really do have a huge drop down in the VRPV towards that next area of support. If we do happen to do so, we of course will most likely be closing under 30,000. So let's talk about that. If we close under 30,000, again, this isn't the end of the bulls. This isn't the end of the macro uptrend. This isn't the end of the weekly uptrend. For the weekly uptrend to be lost, we do need to break below that level. Until then, the weekly chart is looking strong. The macro chart has a chance to flip bullish, and we'll come back and look at the technicals in a second. But let's go to the macro chart. So $30,000, why is it significant? If we look at the prior 4-year cycles, and of course the macro monthly chart as a whole, we have two very key significant levels. The first ones being the dotted trend lines, the second ones being these horizontal levels. These horizontal levels mark the base of support on the monthly chart, or a monthly horizontal resistances that we've seen basically occur in every cycle. When we lose this level, we capitulate toward the downside very aggressively. We lose this level, we capitulate toward the downside. We lose this level, we capitulate toward the downside. As we can see, every time we break a monthly candle and close a monthly candle above that level, and represented by here and represented by here, we generally continue in an upward direction toward our dotted trend line, where we then have another rejection. But what that signifies, it signifies a shift in macro direction. A monthly candle close above that major horizontal resistance would indicate a shift in macro trend. It would indicate a shift from a weekly uptrend into a macro uptrend. And that is why 30,000 is a significant level to close above. Now, like I said before, if we fail to close above 30,000, that is not the end of the world. That is not the end of the world. All it means is we're likely to see a scenario in which played out all the way back in 2016, where we have a few months, if not a month, of consolidation around that level before we eventually continue upwards. Now, I've talked a few times already about certain scenarios which could play out, resulting in a full rejection from 30,000 and then an eventual move into a weekly downtrend again, pushing us into a macro downtrend. But for that to happen, we need to see interest rates rise up again. We need to see inflation aggressively come back up, and that second wave of interest rates as a result come back up. Because remember, inflation is good for assets, interest rate rises are not good for asset prices. So if interest rates start rising again, that could suppress Bitcoin, that could push Bitcoin back down into a bearish trend, but it is too soon to say anything for sure. If we look at the weekly chart, we can see two really good things have occurred. We had the break over the 62 on the RSI on the weekly chart, indicating a momentum shift upwards. And we've had a weekly candle close above the Gaussian channel upper band. Again, every time we have seen that, we have always seen a continuation upwards. When it has been a break from the red downside to the red upwards, we've always seen a higher time frame continue upwards on that weekly chart. So moving back to this chart over here, guys, we can see if we do reject, if we do have a short-term pullback, we are looking for that support around 28.5. If we lose 28.5, that is when it starts to get a little bit weak on the weekly chart again, and we do run the risk of actually turning this weekly chart a little bit more bearish. So right now, the weekly chart is up. It is in a weekly uptrend above 24.4, above 25.2. Awesome. The weekly chart is looking strong in terms of a technical perspective, while it remains above the 200 and while it remains above the upper band of Gaussian channel. If we lose these levels, it then shows weekly weakness, which could push us under that weekly support level and take us lower. Again, for this to happen, I'd be looking for interest rates to start rising again. I don't think it would spontaneously happen. If anything, the prices are more likely to continue upwards. But it doesn't mean the prices are going to automatically continue upwards. We have to remember, guys, as we look at our higher time frame ranges over here on the Bitcoin chart in regards to our resistance levels, we can see, according to the VIPV on the right hand side here, we have a huge area of resistance and support within this range, and we have a pretty decent gap, guys, moving up to 40,000. So after 40,000 moving upwards, we can see the resistance starts to build up again. It is very unlikely that we're going to push aggressively through these levels. If anything, the move up that we are going to see over the next few months, if it plays out, is going to be more of a slow grind upwards. You can see we have rising VRPV representing rising resistance, meaning we require more volume to push through these levels as we do to come down. So again, this is an area of increasing resistance as we push upwards. And again, to push through increasing resistance, we need more and more volume. Moving back to this chart over here, guys, you can see very clearly that this area of resistance, according to this chart, sitting at that $32,000 mark, absolutely has to be broken for the price to enter a higher time frame uptrend. For that macro uptrend, we do need to see that move upwards. Breaking above a monthly candle on 30,000 will enter a macro uptrend. For that next move upwards, we need to get above 30,000. So watch out for that level. I think that's about it for today's video, guys. I don't want to overcomplicate anything. I don't want to go into too much today. I'm not feeling the best. I've got a little bit of a sore throat today, as you probably noticed. So I'm going to keep today's video nice and short and sharp. I think moving back to the smaller time frame, the two key levels you absolutely should be watching moving into the monthly close is going to be this downward trending resistance. Okay, watch that. A break and close on the 12-hour above that level will be very bullish. It will most likely send the price back upwards. Until then, we are looking for rejections. We are looking for short biases. We are looking for corrections. As we can see, the RSI is breaking back into this territory from overbought, okay, below the 70-point RSI, indicating again a bearish trigger. We can see that the momentum on the 12-hour is, of course, also flipping negative. This is positive momentum, but it is weakening positive momentum. These are not particularly good signs. If we go down to a smaller time frame, such as a 6-hour chart, we can see we are pushing into these smaller time frame moving averages. On a 4-hour chart, again, we can see we are pushing closer and closer. We can see the 50 EMA is catching up to the price action, representing that overall volatility during these periods was higher than over here, representing overall weakness. So we do not get that momentum reset if Bitcoin cannot push above that diagonal resistance, wherever it was. I think it was sitting around over here. We are more likely to reject and push downwards, filling those areas of support as discussed in the video earlier today. So watch those levels. If we break above, it's going to be fantastic. If we break a monthly candle above 30,000, it's going to be fantastic. I do want to say one more thing over here, guys. If we do break a monthly candle over 30,000, it is very unlikely we will close a monthly candle under 30,000 again, as per the historical price chart. Okay, if we look at these monthly candle breaks, every single time we do get it, we don't see a monthly close underneath it again. And if we do, it is very minimal. It's basically on it. Okay, even that COVID crash, we did not close below it. So that is not saying if we close a monthly candle above, we can't push under. It just means that we're very unlikely, or is less likely, that if we do get that monthly candle above 30,000, if we don't factor in external influences such as interest rates, economic, political decisions, societal perspective, if we just factor in the chart and based on historical data, it is unlikely we close under it again, okay? Keep that in mind, guys. Thanks for watching, and I'll catch you guys in the next video. Be very aware of the possible rejection, because I do believe a rejection is coming soon. I do think we're going to see a pullback into these lower levels. I think that is realistic. I think that'll be very healthy for the chart. And I think, again, if you flip the chart and look at the directional bias from here, we can see we have a very probable and very possible double bottom forming here. And it'd be very logical to come up and retest at least, like I said before, at least some of these lows with the best possible target around 28.4. That would be the best possible scenario, I think, for Bitcoin in terms of a healthy retracement. And I think this is the area I'd be watching for to re-enter on bounces or take long positions again. Anyway, guys, thanks for watching. See you guys in the next video. Cheers.